Assalamualaikum warahmatullahi wabarakatuh. First of all, thank you very much, Dr. Moderator, to the IIIT for organizing this program. I think I can just try. Okay. So I think the Zoom can see the slides. Okay. Thank you very much, Prof. Aslam, Prof. Datuk Dr. Fauzan, Dr. Ahmad Badri, Prof. Dr. Omar, and Prof. Ratna, my colleagues, my lecturer, my mentor, and brothers and sisters. So inshallah, today I will present on the research topics. Okay. I need to mention a bit the topics have been refined according to when we do the research. So currently the topic is an assessment of financial reporting practices of economic substance of selected Islamic financial instrument consistent with Shariah requirements. So basically, yes, it's from the perspective of accounting. Okay, the researcher, me, myself, Dr. Muslim, Dr. Said Musa from IIUM. Okay. Oh, sorry. Okay, this one is okay. I just you're going to see the slide. Okay, basically, this is the abstracts. Okay, the idea is due to of the issues. Oh, sorry. Okay, you need to okay things. Okay, the issues on the Islamic banking and finance practices. Okay, so why it is important? Okay, from this argument, you can see there's a critics. Okay? So we need to learn, we need to go in depth. What is the critics of the contemporary practices of Islamic banking and finance? Especially in this case, I quote Gamal, no money. So here, among the critics by Han, on how well the contemporary Islamic banking and finance practices based on the four characteristics. Okay. First one, Islamic banking and finance cannot be said to be risk sharing. So when we learn about Islamic banking, so the concept is on risk sharing. Okay, but I mean, few studies found out it's not totally risk sharing. Okay. Maybe we more inclined to asset-based financing, which leads to debt-based financing. Okay. Okay. Number two, Islamic banking and finance often has no meaningful underlying transactions. This is from Han. Okay. So it's good for us to go back to this paper, how they critically analyze the Islamic banking practices. Okay, so by way of this underlying transaction, later when we look at, I will illustrate on the modus operandi, especially from the accounting perspective on reporting. When they report, they look at the whole transactions. Okay, for example, if they use murabahah or ijarah, not only one transaction, maybe there is a combination of other contracts. So from the accounting point of view, they will look at the overall contracts to report. Okay. Okay. Number three, Islamic banking and finance, higher fees. Okay. This may be, okay, this from my view, this may be in the earlier times. In the earlier times. And now, from my observations, it's quite competitive. Okay, this might be because of previously Islamic banking are new, they not reach economies of scales and the cost a bit higher. Okay, and number four, Islamic banking and finance institutions are sometimes guilty of not being Shariah compliant. This is very, very crucial. Okay, however, Alhamdulillah now, okay, we have Shariah committees, and then they need to report to, especially from Malaysia perspective, they need to report the Shariah non-compliant income. For example, they need to disclose the amounts, and then they need to tell how they rectify it. Okay, so that is actually the motivations. Okay, sorry. Okay, so this is the research objective. Okay, despite the argument on Islamic banking and finance mimicking conventional banking and ongoing debates on the issue in practice, so this research examined from different approach that can support the development of Maqasid of Shariah framework to explain the substance of Islamic financial instrument adopted by Islamic banks in their operations. So this research basically look how Islamic financial institution adopt the Islamic financial instrument based on Islamic contracts. Okay. So the objective is first to examine the substance in reporting of financial instrument adopted by Islamic banks. And then the second one to adopt the Maqasid Shariah principle in validating the substance of the financial instrument adopted by Islamic banks. So when we talk about substance, okay, from accounting point of view, we always look at the substance. Okay? If there is a conflict between form and substance, the reporting wise, we look at the substance of the transactions. Okay, some of literature review. Okay, how? Because this is from, okay, documents from central banks. Okay, for this paper, most of the many reference is from the policy documents. So we try to apply it. So this value-based intermediaries, okay, the concept of value-based intermediation is defined by the central banks, Bank Negara Malaysia, as an intermediation function that aims to deliver the intended outcome of Shariah through practices, conduct and offering that generate positive and sustainable impact to the economy, community, and environment consistent with the shareholders' sustainable returns and long-term interests. Okay, I think the second presenter already highlights on this issue on sustainability. So for banks also, bank is a firm. So they need to look also on the sustainable return for long term. But without forgiving all the sustainability agenda. Okay, so this VBI is considered to be an attempt to promote a more holistic perspective of Sharia that goes beyond Sharia compliance. The form is Sharia compliance in Islamic banking commercial operations. So this is where accounting's perspective to see the substance, the economic substance of that transaction. If we see here the intended, okay, all right, just now I forgot to put here. Sorry. Okay, so this is the concept, the intended outcome of Sharia that I just mentioned. Sorry. Okay. And then, okay, based on literature on Maqasid Shariah framework. Okay, so this basically we can see that, okay, the first from Dusuki and Buhrawa address the subsistence of human life. Okay, so basically they look at intellectual qualities. Okay, and then when we zoom to Islamic banks, we can see here the applicable to Islamic bank performance, including profitability of the banks, distribution of income and wealth, and investment in real sector. This is where the profit sharing, investment, in the distribution of wealth, where we use, for example, zakat. And then when we look further, this promote or that Maqasid Shariah protection of wealth is to ensure the community wealth preservation and growth. With the emphasis on achieving Maqasid, Islamic bank in both products and operations should be designed to contribute to greater wealth creation in line with the Shariah and to ensure its equitable distribution in the community. So that is the Maqasid. Okay. Okay. Now we look at the reporting. Okay. Reporting in Malaysia is unique because we use the Malaysia Financial Reporting Standard. And then it comply with international financial reporting standards. So this is a global standards. So this is the challenge. Okay, we can argue why don't we have our own standards. So we in Malaysia perspective, we follow these standards. So this standard is international standards to enhance the quality, credibility, and transparency, and also for comparison. So, okay, in this case, these issues has been addressed by also Asian Oceanian standard setter groups on the reporting of Islamic financial transaction under IFRS, highlighted the update on financial reporting issues. Okay, among the issues including the recognition of financing effect, profit sharing contract, sukuk, takaful, and ijarah. Okay, this is a policy standards, working paper. Okay, so in due to that, okay, for this research, we focus on the most widely used asset-based financing, which is murabahah financing and also ijarah financing. Okay, this is in 2018. Okay, yeah, in 2018. I'm sure the update one not much different. Okay, because we are not that we are not in Islamic bank not much using the equity based financing except their investment account. Okay, so we can see okay, murabahah including tawaruk and ijarah is the dominant. Okay. Okay, and then we see here. Okay, so this is on murabahah financing. Okay, the definition from policy document of Bank Negara. Okay, so they define murabahah refer to a sale and purchase of an asset where the acquisition cost and the markup are disclosed to the purchaser. So basically, if you look further on the modus operandi, this on the structure, this source from Malaysia Accounting Standard Board. Okay, basically you can see they are basically four steps. First, the transfer of ownership, and then the payment of a purchase price, and then the transfer of ownership of the asset to customer. Number 4, payment of deferred basis at a cost plus markup. This is where the cost plus. Okay, this is the rate that can be benchmarked to interest. So we need to look further. issues because you are leasing. The owner is still the bank, for instance. But how you report it? Okay. Again, when we look at the substance, okay, I think all of us have vehicle financing. Okay. Okay, when we have a vehicle financing, all the risk and reward is already transferred to us. Okay, because all the risk and reward, so based on the substance, it goes to financing. Okay, that is a layman. Okay, that is a general views. Okay, of course, when we look at the standard, they need to see whether they have a structure, whether the definition on leasing is the definition of ijarah same as leasing. If not, are they a financial instrument? That is on the standard. Okay. Okay, so this is the conceptual framework. Okay, so basically what we are looking at, we want to argue whether this Islamic financial instrument adopted, okay, whether they just look at the legal forms or economic substance that may lead to Maqasid Shariah, or just looking at legal form that lead to Sharia compliance, or there is any interrelate between Maqasid Shariah and Sharia compliance on the orientation of financial reporting economic substance. Okay. Okay, so what we do is the research methodology we use is a qualitative. Okay, we have a focus group discussion. Okay, we have a focus group discussion with academicians that have experience in accounting and reporting. Okay, so maybe it's a bit small. Okay, so the findings shows, okay, the definition of we have a three general theme. First is on the definition of object and utilization of asset in Islamic banking. Okay, here I just maybe I read what the respondent. The respondent form mentioned about how important of the contractual nature of Islamic banking products, because the contractual nature will make it different from conventional. To me, the contract is very important. When look into the issues of accounting, we really need to take consideration of the nature of the legal contracts, as it will make a bigger difference from Islamic products and conventional products. Okay, this is where, okay, for example, if we report using our fee standard, okay, the reporting is based on the name of the contracts. But if you look at IFRS or MFRS, you cannot see any contracts, Islamic contracts names there. So they need to look at the substance. Okay. Okay. So, okay. Respondent 1, object is referring to the financing that recorded as financial instrument using MFRS 9. However, it's not tally with the policy document which Islamic banking required trade and ownership on the asset before sale or rent using MFRS 15, the revenue. On the revenue recognition. So this is some of the argument. So as I mentioned, when we have a trade, how we want to report it as a trade, not merely a financing. Okay, because Islamic bank is the financial intermediary. Okay, okay. And then respondent 3, in the contractual itself, it is quite blurred to me with the recent development. Some of the argument coming, they would like to have the mudarabah hakiki again. Okay, the pure, I cannot say like maybe pure mudarabah, but now the Islamic bank came out with new contract with similar to murabah hakiki, but the product itself is specified and designed to tell customer that it is real and own the bank. The bank buys piece of land and sell it to customer. Okay, so this is some of the findings, the transcript when during the focus group discussion. Okay, so I just summarize it. Islamic banking activities is differed from conventional bank in terms of object and utilization, real economic benefit of the asset by the contractual relationship. Okay, a few of Islamic financial instruments, in particular the murabah financing, ijarah financing, that by its legal form should be the transaction of trading of an asset and leasing of an asset based on the opinion. Contractual relationship has shown the similarity between Islamic banking and conventional, even though there is a development in product characteristic to adapt with the object and utilization. Okay, for finding 1, The summary, Islamic banking is supposed to be different from conventional banking to remain competitive in the market. However, contractual relation needs to be aligned with policy document and reporting requirement in the financial instrument. Okay, that's finding number 1. Okay, for findings number 2, the interrelation among financial instrument and product of Islamic bank activities that comply with financial reporting requirement and financial representation. Again, I read the very briefly. Respondent 1 mentioned regulators need to have additional guideline issues. Even though not a full solution, at least provide the customer to understand the uniqueness of Islamic banking and Shariah contract requirements. Okay. Respondent 3, not totally reject. Okay. But it is more beneficial look into more flexibility in adoption of financial standard where need additional guideline and additional rules and regulation which more accurate on the activity in Islamic banking because of uniqueness compared to conventional banking. Again, the issues of uniqueness. Okay. And then the respondent 1, good to have a presentation on what Bahrain and Aufi has done in the financial statement. The presentation is the key part in financial statement that should be reflected in the financial statement. Of course, the note just be detailed to be referred later. So I would like to say that it shouldn't be an issue that we reflect the liability, asset and equity. Only the auditors will not want. This one maybe the experience to be there. As my experience dealing with the external auditor when come on the presentation wise where they want to follow exactly like commercial bank. So this is from the view of the respondent. Okay, I just make the summary here. The financial product and instrument of Islamic bank can comply with conventional bank regulation and requirement if there are flexibility and additional guidelines that are more suitable for the Islamic banking activities that can solve the issue in Islamic banks such as zakat, wakaf, and other Islamic banking products. Okay, okay, the last theme on the issues from the focus group discussion. Okay, the expert view issues and concern in the implementation of Shariah compliance. Okay, one respondent 2 give illustration on Aceh. This I think this is more when they have their autonomy to regulate the Shariah. So he suggests that okay, we can have our own standard. Okay, respondent 3, when it comes to accounting, is not really full blood. For example, in Malaysia, whether we try to use IFRS framework for both, so I don't have negative regard to use IFRS. But of course, we need to understand when we take one accounting framework to support side of institution, conventional and Islamic banking, but there were some limitation. How accurate, for example, like IFRS can really represent the uniqueness of Islamic banking operation. That's one respondent 3. And then another one, on respondent 1, when come to Sharia audit and Sharia review, the reference can either from Sharia committee ruling, SAC ruling, and all policy document of Bank Negara Malaysia. All the policy document and parameter issued by Bank Negara, I think whatever will be there will be used by Control Financial to perform their specific rule in audit or review. Okay. Okay, so just, sorry. Okay, so here some of the issues, limitation on the accounting, adoption of reporting, issue pertaining the development of Islamic banking products. Complication may also arise when the Islamic bank report the Islamic social finance instrument later, adopted by Islamic banks. Okay, and among the concern, Sharia committee need to ensure the control function will be based on the Sharia committee report to look into the object and utilization to do the task. And then Sharia, among the concern, Sharia committee need to look at the evidence when conducting the task based on the policy. And another one, the important one is Islamic banking need to clear and independent based on Sharia principle to implement the accounting standard. Okay, to conclude, okay, the validating of substance and form on the reporting in Maqasid of Shariah framework for the financial instrument can be applied by Islamic bank to ensure compliance. Okay, we can see the policy document have helped tremendously on the compliance side. there is a need for accounting standard that focus on the Islamic financial instrument to ensure faithful representation of the financial statement. So let's say we argue that, oh, the leasing, ijarah, it shouldn't be like this. But if the substance is not reflect, basically there is a conflict within substance and the forms. So the reporting wise, they will look at the economic substance. Okay. And then finally, the substance and legal form should be aligned to reflect the financial statement based on the policy document that have been developed and show the uniqueness of the Islamic financial instrument in the financial reporting. Okay. Thank you very much.